been racking up too many commissions, you feel like you've probably been overdoing it, which is definitely something that I felt in the past. My number one recommendation to you guys is simply to get rid of the intraday time frames from your favorites. Don't look at the intraday time frames. The lowest sort of time frame that I would go to would maybe be the 4 hour time frame, which you can see here. And then don't even worry about, guys, what happened on a sort of lower intraday time frame. Just worry about the daily, the weekly, the monthly. And those are really all the time frames you need, guys. You really don't need, from my experience now trading for some time, you don't need all the different time frames if you're not going to be trading super actively. If you're not going to be trading multiple times within a day, it's not really necessary. You can simply stick to the daily chart, the weekly chart, the monthly chart, and spend the majority of your time here on the daily chart, guys. So in this video, I've talked about how you can stick to the daily, the weekly, and the monthly time frame, and that is more than enough to trade, and it'll probably keep you from over trading as well. Okay, guys, with that being said, now let's move into the current price action for Tuesday, February the 13th, what I'm seeing on the daily chart here on the MES, and we might also have a look at the MNQ. So, okay, looking here at the daily chart, guys, you can see that we formed an all-time high on Monday, the 12th of February, 2024. That all-time high came in at 5,066 halves. The market sharply turned around yesterday, leaving us with a long wick inefficiency. The midway point of that long wick inefficiency is going to be 5,054 halves. We came down in, so you can see that Monday's candle with Thursday, the 8th of February's candle, formed a fair value gap, and then the market traded right through that fair value gap and into our daily fair value gap that was formed between Tuesday, the 6th of February, and Thursday, the 8th of February. So you can see our buy-side imbalance, sell-side inefficiency. The market has currently plunged through that, and now, guys, we're looking at trading into this order block here. So this order block, the mean threshold of this order block comes in at 49.67 halves. We're currently trading in the right here at the mean threshold of this order block, and we have some wick inefficiencies lower. We also have a much lower, guys, into the 4800s. We have a daily fair value gap that you can see is sort of sitting lower. I've also marked out our pretty obvious sell side liquidity, which is sitting at this candle's low. The top left of my screen, you can see at 48.66 evens. I would not expect by the way, guys, I wanted to mention that the sort of news catalyst for this move lower is, you can see on February 14th, we had core inflation, which was higher than anticipated. So our 3.9% inflation was higher than the projected 3.7%. So we had a pretty negative inflation print today. And then inflation rate year over year, you can see at 3.1%. The forecasted was 2.9%, guys. So the inflation rate year over year is higher than what the market was expecting. Inflation is sort of the boogeyman right now. Inflation is what most market analysts and people that talk about the market do not want to see. So you can see that the market is selling off on that higher than expected inflation print. Now, guys, as you know, I don't really believe in fundamentals, but I do believe that they are a catalyst for volatility. And, guys, we really we were really extended on this market. I mean, if you just see, even with today's pullback, guys, and we're down at this point, we're down quite a bit. The S&P 500 is down almost 1.5%. The NASDAQ is down almost 2%. So it's a pretty big sell-off today, guys. I will show you my execution. I did take a trade on the overnight hours. So I'm sorry that there are so many executions, but I'll go ahead and show you. Okay, guys. As you can see, I did have this sell. I sold yesterday at 5,036 halves, and I covered it at 5,003 3/4, which is about the midway point of our point down. I will tell you what I was seeing. This fair value gap here, I traded one tick into it. So as we were sitting up here, sort of towards the end of Monday's trading, I wanted to get one tick into this fair value gap, which we did. We actually went much further than that, so I could have even put my order way down here at 49.78 and a full retrace of this fair value gap. Now, guys, if you remember your rebalance and redelivery, we have not, we've traded back through this fair value gap, but we have not rebalanced it yet. So we've redelivered it. We've redelivered this fair value gap, but in order for us to rebalance it, the market would need to come back, trade up like so, and then trade back down. So guys, at this point, what I recommend taking a sell after we're already down almost 1.5%, and we've plunged through this daily fair value gap. And you can see a little bit of a bullish reaction now off of the mean threshold of this order block. In my opinion, guys, I think that if you were not already in this move, it's probably a little bit too late. So as you can see, guys, we had a fair value gap here, fair value gap here. We've plunged through it. We've redelivered that fair value gap. We had a negative CPI print, which has been the news catalyst for this move lower. And then let's take a look at the micro NASDAQ. See, the micro NASDAQ didn't really have that fair value gap that the ES had, but we are trading into the mean threshold of this order block here. And let's mention our sell side liquidity here. Okay, so guys, overall you can see that the NASDAQ is outpacing, or is currently the leader on our move down compared with the ES. So all in all, guys, I think that where the market stands right now, we're probably going to pretty soon here make a low. That low at 49.65 3/4 looks about appropriate to me. I could see us coming down lower to about 49.50 today if the market really wants to get aggressive in the sell-off. I expect that the market coming into Thursday is probably going to have some sort of a retrace, and then we'll see if the market gets up to the consequent encroachment of this buy-side imbalance, sell-side inefficiency. We could see this fair value gap turn into an inversion fair value gap and then take us down lower, guys. So we could be looking at a serious shift in market sentiment. I also want to mention that we are now currently trading below our prior all-time high that we had at Monday, the 3rd of January 2022. So we're currently, guys, coming back into reasonable territory. Looking at our weekly chart, we have sell side. We have 5 straight weeks higher. We've got sell side liquidity down here at 4701 halves, or that rejection block on the weekly time frame, 4735 halves. So guys, we could be seeing a shift in market sentiment, and depending on our different news prints, guys, we could be seeing a shift in market sentiment to where we're expecting now could be changing to a bearish market environment potentially. Okay, guys, this has been my video on trading the daily, the weekly, and the monthly time frame if you're trading full time, as well as a market recap for February 13th. Coming into February 14th, 2024, we reviewed our CPI print, we talked about our fair value gaps, and we talked about using the daily time frame. Okay, guys, thank you.